G'day everybody, John Seville, Acorn Wealth, and this is the Executive Summary. Setting up for tomorrow's trading, of course that's Thursday. And let's start with the S&P. What a beautiful move. Yesterday we warned of the fact that we hadn't seen kind of movement like this since 2008, 2009. That just proved itself today when we saw this great breakdown with the market opening at the high and just moving straight down and finishing close to its daily lows. So if we continue, obviously we now have broken open range to the downside, which means we should have downward movement to, what's the date there, the 17th, being the options expiration next Friday. So again, we're looking at these kind of levels here coming in. We've got support at 2014. We should then have some support here at 1980, but that, and then the lowest that all the way down to 1910. So we'll continue to see probably bearish action on the S&P. Now, I'll start by reviewing the stocks that we've been following in the executive summary. So for all of you who've been who are fully fledged members who've been receiving all the updates, I mean, these are the stocks we've been watching and picking in the executive summaries. Let's start with Men's Wearhouse. This is one that I currently own myself. It's still an active play. Men's Wearhouse has just dropped beautifully. It came straight down from our entry criteria and is now challenging the moving average, holding beautifully under the moving averages above. And it's just about to break the, well, looks like it's about to break the moving average underneath, of course, as well as the horizontal support here at around $60.50. So that's looking healthy. Let's look at AKRX. Also, that was from the executive summary last night. I also took a position in this today myself, and this looks like it's just moving beautifully as well. We'll just wait for that to load up. You can see just dropping straight through that 200-day moving average support, and that now looks like it's in free fall zone. So that could just continue down, and again, we'll look at just lowering the stop loss as that decreases. But obviously, there's the first support level. We could just break straight through that and free fall all the way down to 26. So AKRX looking great. Now, some of the stocks that have already hit their targets or are continuing through to lower targets. CRZO was a beauty. That was from the executive summary the other week. This was a breakdown from below 50, and it went straight down to our target here. We can see the horizontal line playing out perfectly. That pattern here, the pattern here from the distance between the two channels. So an upward channel, of course, being bearish, not bullish, bearish. And there we get the first touch, second touch, third touch, break. And there's our extension, and you can see it went down and hit that exactly. So beautiful technical rules playing that one through. Now, let's so about 20% move on that one. If you're not happy with that, I don't know what you would be with. Let's have a look at GEVO. Now, this was a moneymaker for anyone who took this one as a short and is still doing it. Again, but we talked about a target of 303 down from around the 340 area. So there was at least about a 10 to 12% profit made to that first target. But again, if you're just playing them kind of like we are, just lowering the stop loss as the position declines, you would have made an even bigger return today when it plummeted another 20.5%. So again, that was from last week, I believe, executive summary, and that's just a beauty. So doing really, really well. Big payday for anyone shorting that currently. And again, I would just be lowering the stop again. And I've been looking at just beneath the moving average, above the moving average here. But at this point, with a 20% drop, I would take half profit. Okay, UTIW, another winner. In fact, it's hard to find some of the stock that we've picked recently that hasn't won. This has been a beautiful technical market, and this one's dropped straight down from $10, closing today at $8.90. So UTIW looks like it's just going to keep on going. What was the volume today? 924,000 over 1.13 million yesterday. So yeah, kind of ho-hum volume. But if that breaks the low here of 874, we're just going to be in free fall territory. And as you can see, not very strong support here, very sluggish, very slow and rounded, not the kind of sharp resistance that we see in when high frequency trading is present. So we shouldn't be too concerned about that support level. I think it's more likely it will break. Let's continue through. CRWD, another winner. This was the therapeutics company we talked about again last week. You can see just rallied up, hugged that resistance, and then just dropped beautifully today, 5.94%, and that should continue down also. Hilton hit its target, HLT, or its first target anyway. And not a big money maker in the stock play, but we talked about this being very optionable. A break beneath that 28.80 level, and it's just gone straight down to that first target we had here. And you can see it's stopped right there on the 200-day moving average and this previous horizontal support. So we can see that might hold it for a second, but a continued break below should take us down probably at least to these levels here, around 24.50, 24.60. TRQ, wow, that one did really well. This was one I was short myself also, and went straight down to the second target yesterday actually. You can see that as it comes up on the chart, this was as short as it broke down below that $4 level, and you can see that lovely how it holds that moving average the whole way down, exactly what you want to see with a capturing the crash trade, and you can see that's just dropping beautifully. And just coming down, hit that target. I think it was 347, I believe, was the target. The low today, yesterday, was of 342, and it's just stopped there, and it's currently bouncing. But that was awesome. TROV, one that I still hold. We were looking for this to, it kind of had some oscillation after its first big break. Of course, we were looking to short it as it broke down through that trend line, and it came straight down, bounced off support, has created a pennant, and then if we can measure that pennant and put the extension on it, then we're looking for a breakdown, yep, exactly to that 200-day moving average. So I would expect this to drop down to at least that $7, just a few cents above $7, so 707 or so, I think is quite likely, which would be obviously over 20% more decline, and one I still hold. Yum, this was from last night's trading room. This has been beautiful as well. It just, we looked for a break of 88.92, and it opened below that, so it would have entered you into the trade if you were using a sell stop order, or a sell stop order. Broke down, rallied back up towards the end of the day, but the money flow continuing to flood out of the stock. So for anyone who's been following along with these executive summaries, we've been sending a few out complimentary over these last couple of weeks, just to show you how well these things perform when they're technically well set up. Hopefully everyone's been able to use that to their aid. Now, we'll move on to the new stocks. Let's start with BSX, because we've had a lot of stocks kind of obviously come off the roster with them hitting targets and taking profits. BSX is one of those new ones we're looking at. Again, you can see this lovely pattern here of declining tops and kind of convergence of the pattern. So we can look at this type of convergence, but the money flow is showing us where the money is going, which is out. So in terms of looking at where this goes next, we could see this has insider selling. All we're looking for here is a break of 1727, and that could easily drop down to 1640. My second target would be 1533, which is right when we start to intersect with the moving average, as well as the gap fill over here on the left. As a stop loss, I'd be looking at 1787. Next on the list, we have CDE, Charlie Delta Echo. Okay. CDE. Again, rising wedge. Declining, you can see the strength of resistance at the top, but the sluggish support at the bottom. Tells us that the sellers are in control. Now that's what we'd expect, because that is a bearish pattern, being a rising wedge. And we can see that's already broken down now, and just sitting on top of that moving average. So I'll be looking at a break of 512 for this one, with a stop at 571, and looking at a target of 453, where you can see it starts to get down to support. Now, ASPS. This is quite an interesting trade. I talked about how the stock that we looked at before was hugging those moving averages perfectly, and that's why we've seen such strong downward pressure. Well, take a look at this one. Altisource Power Portfolio Solutions is just declining, it seems, in that same way, hugging those moving averages under a lot of pressure and just pushing further and further down. So I'd look at two possible entry points. One would be a rally up to the $29 area. So if we get some kind of a bounce tomorrow, if it rallies up towards 29, I'd look into an entry there. Or a break of 27.31. Either way, in terms of a stop loss, it would depend on where the entry point is, but I'd be looking at basically about 5% above the entry. Now, in terms of a stop criteria, I'd be looking, at the exit criteria, I'd be looking at 18.31. So that's a lot. I mean, if we can get down from 27 or 29 down to that $18 area, then we're looking at roughly around 30% profit. So this could be a beautiful trade, and there's lots of promise in that as volume increases. You can see yesterday was 436, day before was 211. Today was 551. So volume's picking up to the downside every day, and that looks good. BSBR, Bravo Sierra, Bravo Romeo, another breakdown trade. All of these are coming from our Capturing the Crash scans. So if you're not a member of Capturing the Crash or haven't taken that course, we do have promotions running on that. Make sure you email us at coaching@acornwealthcorp.com. That's coaching. I'll put it on the screen for you. There you go, coaching@acornwealthcorp.com to learn how to find these yourself. It's not expensive, but it's well worth it. But it's called the Capturing the Crash Scan. This is how we found all of these as well as this one. And you can see this has had a beautiful breakdown. 622,000 yesterday, volume. 2.31 million today. So again, I look for a rally up to 519 as an entry. Would be great. Or a break of 503. My stop loss would be at 533, and I'd be looking at a target of at least 454, possibly a lot more than that. Again, something I would be lowering my stop loss as it goes along. Okay, second last, STRZA, Straza. Its actual name is Stars, but I was just being funny, I think. But yeah, look, this one looks good too. I mean, it's a rising wedge, bearish pattern, bearish divergence. I'd be looking at an entry of 42.68. I'd be looking at a stop criteria just above here at 44.13. And my target here would be 35.33. And the last one, NPTN. Kind of sounds like Neptune, Nancy Papa Tango Nancy, or November. I'm not sure which is the correct phonetics. Maybe you can let me know. But look, you can see this is beautiful. It's just kind of consolidating. Didn't have a big drop today. The volume is still consolidating, therefore we want to wait for a confirmation. But if this breaks 827, I look at a target of 703 and a stop loss at 879. Now, if you've been enrolled in our executive summary or you're on our nurture list, we have been sending these alerts out to you over these last few weeks, and that will be coming to an end soon. So now is your time to take a trial of our services if you are not already subscribed. It's only going to cost you $9, and you get these in an email as well as video almost every single day. And we'll also be implementing a text message service soon, which will alert you to those as they happen in real time. So, again, only $9, very little risk for potentially a lot of reward, as you can see from all these positions we've been talking about recently. And, of course, as a trader, $9 is the cost of one trade. So hopefully you'll take us up on our offer, if you're not already a member, to sign up for the 1-month full trial. It's go to acornwealthcorp.com/fly, and it gives you a full month. And if you don't make at least $9 more, then cancel it at any time by sending us an email. But I highly doubt that'll be the case, and we'd love to earn your business and work with you for many, many, many months to come. We put a lot of effort into this. Hopefully you can see that. And again, we'd love to have you on our roster. acornwealthcorp.com/fly, and that's $9 Canadian for a full 1-month trial of this premium service. So hopefully we'll see you soon. And for those members that do take us on, we'll see you in tomorrow's trading room and executive summary. Happy trading, everyone, and good night.